Hey, what's up, friends, family? I want to take some time to kind of do some education today, free of cost. Just kind of want to show everybody how I do what I do and how you can too, and to show you that reading the markets is very much possible and beating the market is very much possible, contrary to what you're told all the time. I've continued to do it for years now, and while the market looks like this and is off not only on the day, but on the week and on the month, and on the year, right? Year to date, still mostly down, right? Finance, tech, looks like crap, right? Which is the growth sector. Um, Simultaneously, my Discord's sitting pretty close to all-time highs. So how is that possible? How is it that we're not losing money? Well, you know, I I can show you guys a few things that will kind of demonstrate how I saw this coming. And I actually predicted the top of the market, which they say is impossible. And to be fair, it is pretty hard to predict the exact top, but I was 2 days early from the exact top of the market, which if anybody would like to see, I can actually go show you guys proof of that in my Discord. But for the sake of this video, I'm not going to bother. But anybody that would like to see it, I can go find the message. Or if I have time at the end of this, I'll do that. But yeah, I know this chart's kind of a mess, and a lot of you guys have no idea what you're looking at, but we'll kind of go over that stuff in a minute. Um, Let me just kind of clean this up so you don't see all of this mess. All right, and I can turn some of these back on, um, here in a bit to kind of show you what helps me. But these lines are lines that I put on here. These boxes are boxes I put on here, and this kind of rainbow looking color thing is also something I put on here, and I'll explain that stuff in a bit. But without any indicators, you still could have seen that this market was going to roll over. And I actually told everybody in my Discord to get out of the market largely, besides your long-term investments, of course. October 4th of October 4th of 2025. Yeah, 4th, was that it? Uh, or sorry, excuse me. I have to hold on. Let me go look here. Okay, it's this right here, somewhere in this area. It's early November. Sorry. Um, so I was a few weeks early. Sorry, not a few days. But in terms of percentage missed and the broad index, we missed 1%, right? From a peak to trough run of, let's take it from the top down to the bottom, a 30, well, I went the wrong way. Sorry, doing this on the fly. Peak to trough run, that was a 43% move on the S&P 500 from April to October, November, right? And I told everybody to buy down here, okay? And I'll explain how I knew really quick. So in this case, at the bottom of my screen here, you can see the volume, right? This is on the daily time frame, but we can also do the weekly for those of you that are even longer time framed. You see I have this giant volume node this week right here, and it just so happens to coincide with the peak of this fall, right? So this is a big fall. It may not look like it, but this is a 21% fall on the overall growth index, the S&P 500. That is a massive, massive unwinding in a 4-month period. And the reason behind that, and the reason that I was already looking to buy this, was because the reason that the market was falling was not any fundamental reason. It was right after Trump got elected, right? Liberation Day and the tariff news. The proposed tariffs that were never going to actually stick. And it was so obvious, if you were paying attention, that that was the case and that it was a bargaining chip, that anybody that would have, you know, paid attention to that would have been able to tell that it's not true, right? Now, if the tariffs were enforced and if the tariffs were actually put in place at the numbers that we saw, then I would have been looking to buy this. But this was all speculative price action. Like this happened because of speculation, not any fundamental reason, right? So very clearly to me, that's an opportunity. Until something concrete happens, any speculative downside, you should be looking to buy, right? So that particular time was very easy read, right? If we go back a little bit further, okay, this is the 2022 bear market, right? This is Biden's um, term, right? And we had real problems here. We had supply shock. We had um, the Fed was hiking rates. We had crazy, crazy inflation. It was like 28% year over year, which, you guys are freaking out about gas prices right now. CPI is still under 2%. I'm just going to throw that out there, but we'll get to that in a minute, okay? This was a real, real issue, okay? We had real, like, solid problems. But again, okay, you could have seen that it was time to get out very easily. Again, if you look at the relative strength of the market, right? So we were overbought at this point right here. And then we made another high, still overbought. Made another high, still overbought, right? Then on this fall and then this pop back up, you can clearly see that the relative strength was about half as strong. So we had half the buying volume on this second move up, this retest, right? That told us that buyers were not in control of the market. It was a neutral market at this point. So the momentum of the market was gone. So in this scenario, right, I still would have been holding through here and I would have told people to exit or take caution here, right? So we would have had drawdown, total drawdown of 5%, right? Not too bad, okay? Now, again, every scenario is different, okay? This was COVID, this was crazy, and the only reason we recovered from this the way we did is because the Fed injected a shitload of money into the economy. So this is all artificial growth, in my opinion. People talk about how well the markets did under Biden, but the truth is that the Federal Reserve injected 66% of all money into the economy in a single year, okay? And this is assets pricing that in. The money has to go somewhere, and stocks grow, and stocks went flying because the buying power of our dollar shrunk, right? So assets hedge you against that. Assets hold value, okay, while the dollar continues to depreciate, right? That's what it does. Okay, so this is, though it looks amazing, all you actually did is if you invested at that point, right? If you were invested back then, you protected your wealth. You didn't actually make wealth per se. We can get into the nitty-gritty of that stuff another time. But anyways, so how did I know that this was coming? Okay, so let me take this off. All right, so this particular time, we had all the time in the world to do this. Okay, so let me go to a daily time frame here and show you just how long. So we entered this area in October, again, around here is where I told everybody to get out, somewhere around here. Um, we entered this area, right? And how did I know? Okay, so again, if you look down here at the bottom, this is your relative strength index. We can see the market was overbought at this point, right? Price moves higher, but the relative strength begins to fade, right? You notice how the strength of the market is fading this entire time, but we're sideways this whole time. That's what we call distribution. And you can see every time the market sold off, you have big red volume nodes that are telling you that more money is leaving the market than coming in. You have that in combination with the relative strength index. So it's very clear distribution. This is a very typical normal market, right? So you get distribution phases, okay? And then inevitably, right, you come down to a support and then the news, the fucking shit always hits the fan right here, right? And you guys are going to say, oh, this time's different, it's real, and it might be, okay? But the narrative would have come either way. Even if this Iran thing didn't happen, there would have been a different catalyst. It's the same shit every single time. They do this to push stocks down. And I'll show you another scenario where the opposite happened. So, all right, so here we are, right? And you're asking yourself, where is this going? Okay, well, this is different. Okay, this is more like 2022. We have real issues. We have supply shock. The Strait of Hormuz is shut down. Okay, even if they resolve that conflict tomorrow, which, newsflash, most likely I think we're going to end up in a ground war this weekend. I actually shorted the market up here and we made like 5 or 6 grand in the last 2 days from that. But again, I'm not going to get into the specifics of how I knew to do this, but um, right, so this is where these indicators come in and help you and can help you make money in a very short period of time. So let me just throw some of these back on here. Okay, so this is one that I made, and then we need the 200 day, the 50 day, and then we got volume, put support and resistance on. All right, so first of all, we can do a fib retracement. So the market moves in fib levels. It's Elliott wave theory, and it's held true since the entire existence of the market if you go back and back test it. So we use that as a base case, all right? So if you measure from the top to the bottom, right, this gives you your fib levels, which is where these lines are drawn. And the rule of fib levels is if you breach a fib level and close a weekly candle underneath or above a fib level, then you should go test the next fib level, right? Okay, so how did I know to short the market? Well, we tried, and as you can see, again, strength was fading, and we hit the top of this fib level, right? We hit the very top of this fib level, and we're losing momentum simultaneously, okay? So then the market comes down to retest the lower fib level. If the market is going to continue its uptrend at this point, you would expect buyers to come in. Instead, what did we see? We saw selling volume accelerate when we got to this level, right? Then we closed a weekly candle on this day underneath that level, right? That tells me to go short until 615. Well, what just so happens to line up with 615? Oh, the previous bull run high, right? And what happens every single time? The last time the market crashed, it came down, tested the previous high. The last time the market crashed, it came down, tested. Sorry, this is where are we back now? We're back in 2022, right? Here's their last crash. Okay, so correction. Where do we come down? Tested just above the previous wave's highs, right? So that tends to happen, and that's based on supply and demand zones. And what happens is when you breach a supply zone, right? Or when you breach a demand zone and you go above it and you shoot way past it, like we did right here, then eventually the market will come back and that should turn into demand, right? That's where people should buy, and that prior support should become resistance. So where do I expect the market to find its feet? Well, the 0.618 fib level lines up exactly with the previous high. What else do we have as a hint here? Okay. Um, I know, here, let me delete this because it's kind of hard to see here, sorry. Covering a lot of stuff, and I know a lot of this is gibberish to you guys, but I'm trying to make a point that this stuff does work. So um, something else that I noticed on the S&P, so there's a couple things that are pretty scary here. We actually have a gap. If you look way down here, there's a gap in the chart, right? So on the daily chart, on any security, 99% of the time you leave a gap, that gap eventually gets filled at some point. Now, what's terrifying, right, is we have a gap way down here, okay, and we have a gap right here, right, and these haven't been filled for, well, since the tariff deal, right? So besides that, we also have the 200-day weekly, right? So this is the long-term support trend for the market. You can see every single time the market touches this 200, if you literally just buy stocks off the 200 in bulk and you just wait, you make money. Like this is 2008, right? So we know this was a one-off, huge crisis, but even then, if you started buying here and started accumulating here within, let's see, within 1 year, you had already broken even, and within 2 years you were positive. So they say that's the lost decade, but if you literally applied this within 2 years instead of 10, you're already up on your investment. And if you continued to DCA the entire time, you can see you would have made a fucking fortune, right? So you take risk at this line is the point I'm making, and you literally can do it just that simply. But the problem is sometimes it takes years for the market to come back to that, and that line is much higher than it was previously because as you can see, it moves up over time. All right. So a couple things that I was trying to get at. So we do have gaps down here. Got a gap here that could get filled, and there's a gap right here. And this is our prime target. See, there's one at 600, okay? And I believe there's one more 628 if I remember correctly, which we're getting real close to right now. Um, okay, yeah, nope. This is the one I was thinking of. So there's this one down here in the low 600s. So it just so happens that major market support is just above this gap. The 200 weekly average is creeping its way up here, right? And we have all this crap fucking news at the same time, right? And these are real issues. They are. And why the gaps matter is because those gaps kind of leave a hint of where the market will target when things change, right? So you can actually see we left a gap up here today, right? So at some point, if this doesn't get filled in the immediate future, that's going to get filled. And when I say it gets filled, that means that price comes back and actually fills that. So you can see here, we gapped down and then literally like a day later filled that gap, then sold off again and then continued on the trend, right? So gaps don't have to fill and they don't always fill, but 99% of the time they do. And when you start to trend towards them, you can almost guarantee with certainty that we will get to those. So why is that important? Okay, so I saw distribution up here, very clear for months and months and months. It's very rare that you get this much time to take positions for the other way, right? Like usually it happens a lot more suddenly. So that was kind of nice. But we saw distribution up here, okay? Then we had silver and gold telling us this. Now, as you can see, so this is going back a decade. We're going to go to the weekly time frame. Okay, so here's the last spike. 2011, we saw a parabolic move in silver, right? From 2009 to 2011, we saw a parabolic move. Well, what just so happened here? 2022 started the move, and we peaked here in 2026. Same type of thing. Hasn't happened in a decade, but what did that signal to us, right? What happened back then? Well, the 2008, 2009, right when these metals started to run, was the beginning, right, of a huge financial crisis. And what the metals market was telling you is something is very wrong with the economy. And you guys are going to, some of you watching this video are going to say it's because of Trump, but you can clearly see that this move started way back here in 2022. And I'm not saying that it's because of Biden. It's not. It's because of what the Federal Reserve did during COVID. That broke it broke the financial system. It was already broken, but it destroyed it, and there's no recovering from it. The United States uh, middle class died that year forever. Mark my fucking words. So if you understand how all these things correlate, then you would understand that that is true. But anyways, so we had this huge run in silver start to get steam, right? And I started buying silver, you can guess, right back here, right? During that fucking period of time when they started cutting rates and started creating inflation, right? So I started accumulating silver during that period of time, and I started selling around here, and I sold a chunk here, sold a chunk here, sold a chunk here, and I called the top of this move, and you guys can go on Facebook and look. I said it's time to short silver, get the fuck out, and I said this is the peak for silver, the top's in, right? I said the top is in. You can go look at my Facebook post. I said that right here, okay? And someone was a smartass. I'm gonna pick on you, Austin, not Austin Rios, Austin Lewandowski. You said, sure, blah 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 blah, and we came down, and then 3 days later we printed a slightly higher high, and he's like, I mean, I'm not talking shit about him. It was a fun conversation, but I said let's just talk in a week and see, right? So when I say the top's in, I'm not saying to the dollar. I'm saying it's very very near, right? Well, what happened just the very next day? Silver had its largest down move in history. 37% fall in a single day on a commodity. That is absolutely insane. When a commodity like silver, which you can see for literally a decade, stayed between 25 and $30, uh, drops from 110 to fucking 68 overnight. Okay? Well, why does that happen? Because around here is when the news comes on and was like, "Oh, everything's failing. You got to buy silver. You got to buy gold." Well, that's because that 1% of the wealth in this country controls 50%, 70%, 80% of some of these markets. They were buying silver this entire period of time and it got this huge spike, right? Well, what's the best way to sell your silver? Create a story that everybody needs it, right? So when those people that owned all the silver brought you guys in to buy it and you started to get hyped because you got maybe a week or two of this momentum, you're like, I'm going to be rich. Silver's the greatest thing ever. Boom, fucking smoked you. And now some of you guys bought it here in your bag holding that shit for another 20 years. Okay? And that's what they do. That's what they do. And what I'm trying to tell you is that the technicals on these charts tied with the macro situation going on, right? You can actually pick out where the market is going or the most likely probability of the next thing that's going to happen based on all this information that you have, right, at your fingertips and a good understanding of economics, which I teach, right? And all of you guys are capable of learning this. I'm not an economist, I'm a software developer. I got really into this stuff because I saw what happened in 2021. I saw how many people's lives changed in 2 months, and I was like, man, I have to learn this shit because it can change your fucking life. Everybody, okay? And it is very simple. It's just patience and discipline. That's all it takes, okay? But, sorry, I'm getting off on a tangent here. Silver and gold signaled something was coming, and simultaneously, right, we got distribution clear as day for months and months and months and months on the S&P 500, okay, which is the growth sector of the market. Less and less and less people were buying stocks while the stocks remained at all-time highs. Very, very clear. At the bare minimum, we're going to get a correction from that, okay? That does not mean that everything is over and we're going to crash. And it feels that way right now because we've had 2 days of selling. But realistically, from the top, we're down almost 10%. Haven't quite made it there yet. A standard correction is 10%, and we get a 10% correction every single year. Just about. Okay? So this is nothing to panic over, right? And it's around this area, as I showed you before, right? Around this area, I would expect the market to start finding its feet. And I marked this purple box for you guys for the sake of this video to tell you, like, this is where I would start buying stocks. More heavy than normal, right, is in this purple box. When you see the S&P 500, the SPY, sitting between, 610 to 620, that's where I'd start accumulating. That does not mean that we're not going to come down here, right? It does not mean that. It doesn't. But this is the most likely place for Wall Street to step in and for the market to find support is around this range, okay? That doesn't mean we're not going to come under it. Doesn't mean we won't short-term go under it. But if the bull market is still alive, then that's where you'd expect um, the market to be supported. However, you do not have to just blindly buy that. You can start buying, DCAing, dollar cost averaging around these levels, right? And I'll show you what stocks I would be picking up if that was the case. But just because you hit that level doesn't mean the market's just going to magically turn around and go, right? So you can see when we got to the top, we actually sat there and went sideways for quite some time, right? And in this case, we didn't because that was, again, just news-driven shit, right? But we go back to the bear market of 2022, dude, I mean, we trended down for a long time, right? But if you'd have done the same thing, if you'd have done the same exact principle, so let's run it back. This is called back testing. So let's test that same strategy back then, right? So if we did the same thing and we said that we were going to start buying at the, um, oh, I got to check the fucking level again. Sorry, I'm doing this all off heart. So the 0.618 fib retracement level, which by the way is the most common spot that the market corrects to. If we did that same thing this year and we waited to start buying right here, we would have started buying right around here, right in this region, right in this region. Now, do you notice something? If you were buying all through here, what happened, right? That ended up being a great time to buy stocks. Okay? So do you want to go back and test it again? Because we can. We can do it again. You want to do it again? Let's do it again. Let's do it again for fun, right? Let's do it again. Let's go. Where's a GFC? Let's go to a nasty one, right? This is a real stock market crash. This is 2008. This is the end of the end, right? So, all right. So 2008. Uh, there's the total retrace of the move. So we look at the 0.618 level. Sorry, I can't see here. 0.618 would have been right here. You started buying right here, right? Did you get smoked? Yes. But if you started buying here, you started averaging here, not deployed all of your money, that's not what I'm telling you to do. If you started buying here, let's say you had 10 grand and you said to yourself, okay, I'm going to try and get this 10 grand in the market over the next few months, right? The first 1,000 you put in, yeah, you would have got hammered. You would have been down to $500 very, very quickly, which is crazy. This is like one of the biggest crashes in history. Don't get me wrong. I'm just trying to make a point here, okay? That would have sucked. But if you kept buying and you stuck to your plan, right, and you said, I'm going to buy because we're under the 200 weekly moving average and we're past that 0.618 correction level, right, and the market had fallen at that point over 10%, right, 15% correction, right? If you started buying there and you just practice patience and discipline, again, this is one of the biggest financial incidents in history. This is the housing market collapse, okay? Well, what happened? So 2008 by 2011, right? You had made back your initial loss and you made a shitload of money on the rest of the stuff that you bought during that disciplined period of time. Because again, we said 6 months, right? So if you started when we hit that level, the 0.618 level, that was here in July. So July, August, September, you got 3,000 in. Okay, now you got smoked. Now you're down $1,500 ish, right? But you're buying down this whole period. So here we are in March, right, which is coincidence, like 9 months after, right? So you got your $10,000 in, and you would have been at a loss for a period of a few fucking weeks, right? So this is why it's called investing. You gotta give it time to freaking cook, right? This is a huge crash. This is like I tried to find like the worst scenario in recent modern history. So I'm showing you this one in particular because this was the 18-year cycle theory playing out. So 18 years, every 18 years, the U.S. economy tends to reset itself. It's interesting. It's always for a different reason, different catalyst. Something breaks, but it always seems to happen. We get these 18-year cycles, and then like a 2 to 4 year bear market, and then the market continues to go on and the US seems to grow. And just because that's what happened historically doesn't mean that's what's going to happen in the future. But again, all these data points in combination can help you make smarter decisions, right? So what does that mean? Well, if we apply the 18-year cycle theory, this could get really, really nasty. It could. And I want to preface, like, we are in a war that we just started. And contrary to what you think, that is not why the stock market is crashing. Crashing, quote unquote, correcting at this point. You can't really call it a crash. It's not. It's not. I'll show you why, okay? I'll show you why we're correcting. And you can just, and I'll prove this in a second. Earnings ultimately drives the market, period. Everything else is noise. Earnings is what drives the stock market in the long run, okay? Well, Microsoft here is a great example. This thing is currently trading at a PE ratio, which is price to earnings, of, take a gander here, currently at 22.9, and the forward PE on Microsoft is Um, Granted, I'm Googling this, okay, take it with a grain of salt. But, alright, forward PE ratio is 21 to 22, right? And which is generally situated in the low to mid 20s, right? So that's considered fair value, right? So after this massive fall, Microsoft is now fairly valued. So what does that mean? That means that when we were way up here, okay, this was $1 trillion ago. I want to point that out. This thing it's been created 35%, right? So it had a market cap of nearly $4 trillion, and over a third of that is gone. That's insane. But why did that actually happen? Yes, there's things going on, which creates an excuse to sell the market and bring valuations down. Yes, there's problems in the economy. Yes, this can get worse, but you already see where I'm going with this. Now, after this big fall, now it's fairly priced historically. Also, I'd like to point out, you see this yellow line? Again, this is the 200 weekly moving average, so let's switch to the weekly time frame here. How many times has Microsoft lost this line in, geez, how far back do we got to go here? It touched it in 2012. It did lose it during the GFC. The GFC was like the only time, and of course everything, that was a crash, like a true stock market crash. And again, if you started buying at the gold line very quickly within a year or two, you were up. But yeah, so um, where are we going here? Yeah, so you can see historically that this gold line has worked as a strong support for Microsoft. Now, does that mean that it can't go below it? No, absolutely not. What that means is you can start a position here, pretty aggressive one, I might add. I would do. I mean, I'm already buying this stock, just full disclosure, because we're under it. We haven't been under this thing in forever, right? And we just so happen to have a major support right here, which again, if you come over and you learn how to read support and resistance zones, we have the golden pocket approaching. We're within like a couple dollars of that already. We're at a fair valuation. Their forward guidance is incredible. Their projections are outstanding. As you can see, the average consensus is almost $600 a share, which is 64% upside in 1 year from here. That doesn't mean it's going to happen, but it means the growth is promising. We're still seeing positive revenue growth and positive EPS, right? And this thing, I mean, it's Microsoft, dude. Good luck displacing them. So why is it down? It was overvalued. It did the fib thing, like I keep telling you guys. You can see clear as day. We got above it, but we didn't close above it, right? And then we tried again, and we got rejected again. It's called a double top. It's also a technical signal, right? Very clear that this was going to happen if you know what you're looking at. But so it was overvalued, almost twice the valuation of its historical average, and too much, too quick. That's what happens, right? And then, so why did it happen, right? There's got to be a catalyst to push the price down. Well, of course, right? So AI comes out, Anthropic comes out with, this cutting edge change to basically creation software. And again, I know what I'm talking about here. I'm a software developer, so hear me out because I know this better than most people you talk to. The tech sector is my home, okay? So the narrative is that Anthropic is going to displace and destroy Microsoft, and it will forever, be it's gone. It's done. Microsoft's done because they're the software leader. And that is partially true. And what I'll say there is that AI is changing how software is created and how accessible it is to the average person. And because of that, the historic valuation of Microsoft is probably going to come down. Like that trailing PE of 20 to 22 times might be more like 18, 19 times, right? That might be the case. Okay. But again, we don't really know. But so that's the narrative, right? And I'm telling you that's true because I use that technology myself, and it is quite significant change to the world. But here's the thing. Here's where the market's got it wrong. Microsoft, while they do lead the world in enterprise software. They're also one of the only companies that has the full stack AI suite ready to go, and they are the enterprise owner. Don't be fooled. There's not a single company in the world that has more big business clients than Microsoft when it comes to technology, okay? And they own GitHub, and they're partnered with OpenAI, and they did 45% of their revenue in cloud and AI last earnings period, which by the way they beat top and bottom, and they made 80 billion fucking dollars in a quarter. There's nothing wrong with the company, okay? It's just the narrative. So that started the sell-off, right? Then the war hit and all that crap, right? And then we got down to this area. Then another Anthropic AI breakthrough comes out. Stock gets created again, and the war and fear and escalation proceeds. So again, the stock is in a freaking massive fall. But what do you notice, right? What do you notice? If we look at our technicals, well, we're coming right up on our discount zone, okay? The fundamentals of the company are still strong. We just so happen to get under this 200 weekly moving average, which again is a historically good spot to buy Microsoft if you believe in them long term. I'm not telling you to buy this stock. I'm just making an example and telling you what I'm buying, okay? Just so happens that we're coming up to our previous resistance zone, and we're probably going to find out if it's support again. And as you can see, we already tested it once during the tariff tantrum, exploded. Okay, now we're coming back down and test it again. Does that mean we're going to bounce right back up? Absolutely not. I don't expect that. I actually bet you we will cut through this a little bit because of all the shit that's going on right now. Okay, but this is where you buy stocks long term. And it doesn't matter if they keep going from here. This is where you start buying them, is when they get to these discount zones, okay? That's where you start accumulating shares, and that's how you make long-term wealth. Because, dude, AI is not going to displace a company like Microsoft. Even Jensen Huang, the CEO of NVIDIA, said it himself, that the market has software all wrong. AI is not going to replace software. It's going to leverage it. It's going to replace people. And trust me when I tell you that is true, because I use this shit every single day. I promise you that's the case, okay? I'm not telling you to buy Microsoft. I'm just telling you that there are certain software companies that are 100% toast. Microsoft is not one of them. Microsoft actually is positioning itself as an AI company at the enterprise scale. Okay? I use this stuff every day. We have Copilot licenses at work. Every developer at my job has access to their AI tools and uses it every single day. Okay? All right. So now that we got that across the line, all right? So what I'm trying to get at is the technicals lead the way, okay? And they tell you where price is going to go if certain things happen, okay? So how did I know? So like, let's go back to the SPY again and how I knew to short this and why I'm holding my short still, right? So again, we have these fib levels. We lost the 0.786 fib level very clearly right here. We closed a weekly candle under it, right? And then this week, you can actually see we came up, so we cut under it. We did not get follow through, so I didn't take a short here. We came up, retested the 200-day moving average, rejected off it not once, but twice, and rolled over, right? And got back under that line. This is where I told everybody to go short, because at that point you have confirmation of the lower move. And what has happened since then? Had a 3% down move in 2 days on the S&P 500. That doesn't sound like a lot, but in options, that's hundreds of percents, which I shared earlier. We were up 32% today before it was even noon, okay? And we gapped down today and did not come back up at all to fill that gap, which almost never happens. Usually this thing, you know, will go fill its gaps and then continue its move. So we're in a true like accelerated fall here, okay? So then you're like, how do I know where it's going to go next? Well, the fib rules, right? We closed underneath this fucking fib level, so where do you think we're going to go next? Does it mean we're going to go straight there? Absolutely not. We're going to get a couple bounces along the way. We're super stretched from these moving averages. We're going to go back and test them. We're going to test this previous support, see if it becomes resistance, and probably roll over again. Maybe we'll get through that, but we'll test this one. There's no way in hell we're going to get through this. There's so much resistance up here. So I know how this market's going to go. So what would I do in this scenario? Would I buy here? Absolutely not, right? I know for a fact we're coming down here. There's gaps to fill right here. The news is shit. We have the previous highs down here. We have the next fib level down here. Not a doubt in my mind. I would not be surprised if the market opens on Monday almost down here because of how accelerated this fall has come. And I think we're going to put boots on the ground over there this weekend, which will be enough to spike the VIX, which we'll get to in a second. So if you learn technical analysis, you can see where price will go before it gets its next like fight, if that makes sense, right? So, you know, we fought really hard for a really long time to defend this level. Once that level was lost, you can see clear as day where did we go, right? We came all the way down to this next fib level, right? And where did we get some bounce and some congestion for a few days? Right here, right? And you can see other times we tried, came down, boom, bounced off it, came down, boom, bounced off it, came down here, bounced off it once, twice, hit the 200, rejected off of it 2 times, which this was different, and you could see that was different because the 200-day moving average, right? So again, there's a lot of data here telling us this was different this time. So I was paying attention. I was telling everybody this is it right here. We're going to get this big flush. And we got rejected that second time off of 200. I told everybody to go short, and we are fucking printing money, right? So what happens next? Well, your guess is as good as mine, man. But I know for a fact that we're going to come down. We're going to test this fib level at the very least, because that's how this works. It just is. There's nothing to stop it. There's no resistance in the price action at all. At all. So we're going to come down here and we're going to test this. And you guys can mark my words on it. You can save the video. 614, give or take. I guarantee we will see that price. Probably even lower. But that's the price that will try to get defended. There will be support here. There will be buyers stepping in here. I guarantee it. Okay? That doesn't mean it's going to hold. But that's where we're going to see another fight, right? So what happens now? We're going to gap down most likely on Sunday because bad news. And then we're going to be so extended from these moving averages that you're going to see this huge whipsaw back up. And everybody's going to think the market's back. Things are great. Blah, 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 blah. It might happen for like a day or two because, again, we got a gap to fill here. And we're super, super extended from these moving averages. You can see the market does not move far from these averages ever. Right? Even in big spike downs and stuff, it doesn't stay extended from that for very long. It just doesn't. It never does, right? So there's two ways that it can catch up to that. It can either consolidate here, which isn't going to happen because of the environment we're in right now, or we can capitulate and then bounce really fucking hard, right? And what will happen there is everybody's like, oh, that was the bottom. So after we get this huge green candle and come back up here to test these moving averages again, everybody starts piling into the market, and then what happens? They sell it again, right? And it'll sell down to this level. So how would I play this? I would take a short off the moving averages when we get the bounce, because I don't know when the bounce is going to come, but I know it's coming, okay? And when we come up to retest either this 9 EMA, or if we get a really nice bounce, right, I would expect this 650 level at the very least to be tested, but maybe even the 200 again, right? But most likely the 650 level. I would be entering a short here and doubling down on that short here, right? And I would take that all fucking day. And if we closed a candle above this, then I would kill it and I would take that loss. Okay? But risk adjusted, let me just show you why this is a good trade. Okay? And this is how you win. This is how trading works, because you can't be right every time because no one has a crystal ball. Okay? But you can make measured risk, right? So if we took the entry here at 650 and we went short and we set a stop above this moving average, right? So we're saying take a short position here and we're riding it down to 614. That's our target, right? That's a 2.5 to 1 risk to reward, which means every dollar you're risking has the chance to 2.5x, right? So if you risk 500 bucks, that doesn't mean you put $500 in the market. I'm not going to explain how to do this in this video, but if you wanted to risk $500, you'd be making like 12.50, right? It's pretty good risk to reward. If you want to do it with $10 even, okay? So you risk $10, you make 22.5, right? That's a pretty good risk to reward, right? And it's not amazing, right? But it's okay. And I would take that because we're in this downtrend, because we have lost this fib level, because we do have bad news, because we do have really bad problems in the economy right now. We have oil supply shock, And even if they open the straight tomorrow and end the shit tomorrow, it does not matter. It's going to take a long time for the economy to digest how long it's already been closed. It's not going to just recover overnight. But that's a way it could happen, right? As the news comes out, we get this huge spike and everybody thinks the world is saved. Come back up, hit the 200, boom, seller step in, sell it right back down. Because nothing actually changed yet. We still have issues, right? So you tie all this stuff together and you use the trend, you use the technical analysis, and you can take short-term trades and you can also take long-term investments, and you know where to buy stocks. Okay, you know where to buy stocks, where they're fairly valued, where you're getting a good deal historically. That does not mean that you won't go lower. I want to make that clear. But you know where you're buying at a good value and where your downside risk is limited. Okay? You can make investments on that, and you can take trades on a shorter time frame by using these technicals and these levels in conjunction with moving averages and with the news and with the data that you have at your disposal. And you can absolutely make life-changing money both short and long term. Okay? Is it easy? No. No. A whole bunch of people that try to do this fail. And it's because they don't know what they're doing. But there's a way you can trade with paper money. You don't even have to use real money. You can learn how options work, how shorts work, how selling volatility works. You can learn all these different things without actually risking any of your own money. However, I would encourage you that once you feel confident enough to do so, you do use real money, because the most important part of this entire thing is emotion. Emotion is what will kill you in this game. People hate seeing that red on their screen. They hate it. Okay, and it's a weird thing because if you're investing in something long term, if you go to the store and you want to buy eggs and they're $2, and then the next day you go into the store and they're $12, are you going to buy more eggs or less eggs? You're probably not even going to buy eggs, right? But for whatever reason with stocks, when they're flying, people chase them, right? Well, let's go back to silver again. Prove that, right? So here's silver. Again, the biggest volume in years started right here. This is when we got the beginning of a bunch of volume. This is way more people buying than normal. Started right here, right? After after prices had already moved up, 100%. So you're paying double what you would have here, and now everybody's interested. Interesting how that works, right? And you can guess you can guess what happens the other direction, right? So as it's falling, people wait to sell it until it's like way the fuck down there, right? Sell into strength, buy into weakness. It's really that simple, and you can use these tools and technicals to help you know when that is, but you can't just blindly go off the technicals. You have to couple it with the macro environment, with the economics, with the geopolitics, with the world, the state of the world, right? So there's a lot of things you can look at to tell you what's going on. The problem very clearly right now is oil. Oil is spiking, oil is still elevated. Until oil is not elevated, that's a headwind for equity. Stocks will continue to sell off. Until we see this thing get absolutely crushed, this is going to be a problem. Okay? So that's number one. Number two, we have the volatility index, which, as you can see, here you go. Tariffs, COVID, right? When this thing gets above $30, you got something nasty a brewing, right? And today we closed above 30 bucks, and I was telling everybody that this was coming and that this weekend we're probably going to get news that we invaded Iran. I still think that's probable. We'll see what happens by the time this video is out, either tomorrow or the next day. So, but you'll notice, right, back here in April, right, if you started buying stocks when the VIX hit 40, right, so let's see, we got to that point on April 3rd, so let's go back to the S&P 500, and let's go to April 3rd, April 3rd, right here, okay, so this little floating candle right here was when the VIX got elevated. So what do you notice? We had 1, 2, 3, 4 days you had to sit under that level. Well, I guess 5, 6, 7. Okay, so a week. If you started buying here, a week later you were already break even, but let's be real, if you were buying here, you're going to buy here, right? I mean, that's your signal. That's your buy signal. Start buying here, right? VIX is above 40. Okay. What happened? Got peak capitulation, got peak fear, peak pessimism in the market. Market hits the bottom, huge volume comes in at the lows, and the market goes on to rally 35% in 4 months. One of the biggest rallies in stock market history. Is that going to happen every time? No. But it does tell you when you see huge volume at lows, it's time to get the fuck in, right? That's what that's telling you. That's Wall Street buying the dip, okay? So that this information is very critical, and it tells you a lot in conjunction with other things. Okay, does the VIX really work that good? Is it really that easy? Let's go back and see. Okay, so that was April. Let's go see what's this. Um, this was the carry trade unwind. I remember this one because I was in the market for this guy. So this is August 5th of 2024. So let's go back and let's look. See, because that was the day that we got that huge VIX spike. So August 5th, August of 24. Sorry, so much data here. August 5th, right here. Oh, look at that. Look at that. There's August 5th right there. That marked the low, right? Where do we go from there? Let's see. If you bought that day and you held until trend told you to get out, which it did because you're overbought, right? If you literally just bought, oversold, you bought the oversold condition and held to overbought, you had a 20% gain on the S&P 500 just right there, okay? If you did that with options or if you did that with individual stocks, that would be far more significant, okay? But just showing you the index, it's a huge move, so, okay, so it worked that time. Let's go see. Let's go see what else. What's this big nasty one? I know we got a big, oh, look at that. What's that? Oh, 2020. What happened in 2020? COVID. COVID happened in 2020. Shit. That must have been crazy, right? Okay, VIX gets to 40 here. All right, so this is different. You can see we were at elevated fear for a lot longer. Now, understand, this was a worldwide disease. I'm not going to get into the politics of it, but at the time when it was new to all of us, we were all afraid. Nobody really understood what the fuck was happening. We all have our opinions now, but when it was fresh, people were scared. Okay? Rightfully so. Big disease, you know, scary narrative. This was different. Okay? And even here, right? This is the one that made me pay attention and like made me learn the game right here. So okay, we broke 40 on the VIX for the first time February 28th of 2020. So let's go back. I know this video is really long at this point. It's been almost an hour, but I'm trying to give you guys value, so that's what I'm doing here. So February 28th of 2020. Let's go. February. Here it is. February 28th of 2020. This is March. We're almost there. Sorry. February. Okay. So there you go. There's your first peak fear moment, right? Market recovers a little bit. So you started buying here, okay, and you said, I'm going to keep buying until we get above this 200-day. So you bought, you bought, you bought. Let's just say you bought here, you bought, you bought, you bought, you bought. And I know you can't buy every day, but you get my point. Even if you're buying once a week, okay, so you bought here, and a week later you buy here, a week later you buy here maybe. You get my point, right? You're practicing that discipline because you're at that point where you're getting that buy signal, right? The market fell from your first buy to the peak of its moment, 24%. But again, if you were buying this whole time, you're not down 24% because you're averaging down, okay? What happened? What happened? Well, we know. See, this is a weird one. It's a weird one, but it still proves my point. This time, in my opinion, this is where we should have seen the real recession. This is where we should have seen a really big unwind because we shut down the world economy for months. I know you guys remember that. It was fucking stupid, okay? And even that we recovered from. You have to think about how significant that is. What does that tell you? That tells you that the Fed will inject liquidity and depreciate your spending power by 60% to save the market. Okay? So, should you invest in stocks? 100%. Regardless of the risk, the bigger risk is just holding the dollar. You're guaranteed to lose that way. That's what that tells you. Because your dollar on this day was worth 60% more than your dollar on this day. Do you know how crazy that is? Does it actually show you that? Does that appear immediately? No. We're seeing it now. That's why the market's had this euphoric run these last couple years. It's a repricing for all the liquidity that's now in the system, right? There's so many more dollars now, and stocks accommodate for that. They adjust for that, right? All right. So you get my point, right? So if you started buying when fear showed up, and when fear started to peak, right? Sorry, where are we at here? Right. So we went back and we saw this is the COVID spike. So you started buying the entire time aggressively during that first initial pop. Then what happened? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31. Okay, so roughly a month, right? If you were buying stocks every day for a month during this peak fear moment, you made massive returns. I mean, that was a life-changing amount of money that you could have made, right? Was it choppy? Was it scary during that period of time? Of course it was. Were you red on your stocks? Yeah, 100%. Okay? But if you were buying fundamentally strong companies that were still growing, there was nothing to be worried about. Okay? And this is always true. This thing works every time. Peak fear enters the market when VIX gets above $30. Okay? Today. This is why I'm making this video. Today. We closed. We closed above 30. What does that mean? We're about to get a spike. We're about to get a spike. What's going to cause that spike? I'll tell you what's going to cause that spike, and we'll see how this video ages. By the end of the weekend, we will have invaded Iran. There will be boots on the ground in the Strait of Hormuz, and we will have kicked off a full-scale ground invasion. That is my prediction, and if you look at the satellites and you look at what's going on, contrary to what you're seeing on the news and the narrative that's being told to you, that's what we're positioned to do. And that's what's going to happen. And the market sniffed that out. And stocks are crashing because it's pricing that in because the stock market is forward looking. Okay? If it doesn't happen, the market will snap right back to those moving averages and then continue to fade until we get a clear path. If it does happen, you will see what's called capitulation. You will see a absolutely disgusting fall on Monday. And you should be buying. As soon as the VIX is above 40, if you have 10 grand, start putting that shit to work. 500 bucks a day, 250 bucks a day. I don't care. Okay? And this could go on. And I'm not telling you that things are going to recover right away, and I'm not telling you what stocks to buy. I'm not even telling you to buy shit. Okay? This isn't financial advice. I'm just telling you, okay, asymmetric bet, risk adjusted investment here, right? Worst case scenario, you might be down, or you might you're really not even be down if you continue to buy as long as the stock is like at these lower levels and the fear remains, right? If you continue to practice discipline and practice this with a technical approach, within a few years you will be rewarded, assuming that the US economy survives and sustains this and continues to grow. Now, if you're on the other side of the fence and you think this is the beginning of a much bigger fall, and it may be, I'm not here to tell you it's not, okay? I will tell you this. If the United States economy does not recover, does it even matter how much money you have? Because you're going to be killing your neighbor's cats for food. You're going to be fighting off your neighbors and your friends, right? And you're going to be at war. You're going to be fighting and starving. That's the world that you're in if the U.S. truly crumbles. So there's two things that happen. Either the U.S. recovers because we're a capitalist country and the entire world invests in us and we control, like, we have the global reserve currency. Currently, we still do, right? If that changes, this is a different conversation, right? That's always going to be a risk with any sort of investing or just anything at all. Okay? So the bet is on America at this point. When stocks get to these levels and you start to get to this peak fear, this capitulation moment, you're betting that America will succeed long term. And if you buy stocks at these values and at these peak fear moments, right? When we're already in a correction, dude, you're getting banger deals for the long run. Okay? And I can tell you guys what stocks I'm buying and tell you where I think there's significant money to be made in the long term. Um, but you know what? I've already provided you an hour of content, and I think that's fair. And I don't want to give people stocks by name and then have them not know what they're doing and then freak out when they continue to fall and lose money. That's not my goal. Okay, I'm just trying to show you that when you combine all this data and all this knowledge and you tie it to the macro picture, okay, you can make crazy amounts of money in short, medium, and long-term periods of time, depending on your discipline and your strategy in these markets. And you can make money in both directions. Okay, you can protect your gains without selling stocks. You can get paid to buy stocks, believe it or not. There's all sorts of cool stuff you can do in the markets. Okay, it's worth learning. It changed my life. I grew up very poor, had small bedrooms, not a lot of shit. Yes, there's people that were poor, more poor than I was, but anybody that knows me knows I don't come from wealth, okay? That's basically what I'm getting at. Like, and I was able to completely change my family's life, and we're what I would consider asset rich at this point because of the decisions and the knowledge that I'm showing you here. Like, I learned this stuff, and I did spend time losing money, and I did make mistakes, and it's not easy, and I still make mistakes. But I outperformed the market for 3 years now in one of the biggest bull markets in history. Okay, so I'm confident. Okay, so example, right now, I showed you. Okay, let's look at the Nasdaq. Okay, this is like the tech sector. So your Nvidias, your Apple, your Microsoft, your Google, the big stocks that everybody knows, right? We're down 12% year to date, right? Yeah, this is January that I pulled from. So 12% in this year. We're down 12% in this year on the Nasdaq as a whole. My Discord, the momentum portfolio is still up year to date, still positive, and that's passive investing. The stock picks portfolio just today finally got into negative territory, but is down less than 1%, while the index that you're told to just buy blindly is down almost 12. Okay. And then the taxable account that I use to create income and do trading, again, it's I think I have like 75, $76,000 in there right now, and uh, it's been a bit choppy, I'll admit, but that's my more risky account, and even that is like flat on the year. I think I'm down like $1,200 net, but I made I don't know, a couple grand today. So it's that's my more risky account. That's not something I'm suggesting for beginners or anything like that. But the point is, in the three different portfolios that I use, all of them are outperforming. Are they making me rich right now? No. But the market's down 12% and we haven't really lost any money. What's that tell you? Maybe I know how to protect my capital, right? Maybe what I'm teaching you works. And maybe, just maybe, there's even a way to do it where you don't take any more risk than you want to. And you can find risk adjusted setups where it pays you 5 to 1, 6 to 1, 7 to 1. So if you risk $1, you make 7. You risk $100, you make $700. Those things happen. And when we started this Discord last year in June, just before June, a lot of people came in and just blindly followed me and made crazy amounts of money. But a few people learned and are continuing to make money in this decline. And that is my goal. My goal is to not tell you what to buy and sell or tell you how to do stuff. I want you to learn so you can spot opportunities and you can change your family's future. Okay? I just spent an hour and 5 minutes talking to you guys about this stuff, and I know I unloaded a lot of information and a lot of this stuff is gibberish to you. But I'm trying to tell you that you can read these markets and you can see this stuff if you know what you're looking at. Okay? we will know the floor. We'll know the floor. We'll know the floor. And I personally don't think we have a lot of downside left. I do think there's some. I've showed you guys that. I think we have room to go down further, and we're in an accelerated fall. And I don't think we're just gonna bounce when we do find that floor. But as I said earlier in this video, earnings ultimately drive the stock market. Earnings have been guided up across the board. Okay, Microsoft's average price target based on EPS and revenue is $587. The stock is currently sitting at 360 bucks. Does that mean that it's going to happen? No. No, it doesn't. But they're guiding that way because the business is still growing. Nvidia, regardless of being at one of its most it's not really that far off all-time highs if you look. Just last year we actually had a moment there during the tariff crash where it got under $90, which was crazy no-brainer buy in my opinion. I've been trading this stock for a long time. But even though we're at elevated levels here, from a price to earnings ratio, it's actually cheaper than it's been in 5 years. It's cheaper here than it was here, right? And I know that doesn't make sense because price doesn't reflect that, but that's where price to earnings matters, right? They're making so much more money. So let's look right here. They made $70 billion last quarter. So in 3 months, they made $70 billion in revenue. And what I know about this company, because I follow them, is they have about a 79% free cash flow. Uh, their margins are crazy. They're crazy. They keep most of their money. So let's keep that in mind. So that was 70 billion. So we look back here. You can see here they were only making 25 billion a quarter just 2 years ago. So this company went from making 25 billion in 3 months to 70 billion in 3 months in just 2 years. That is insane growth. Insane growth. And you know what's nuts? They projected to go even higher, and the orders are already there. You can see them. You can see them. It's public information. This is still a fantastic company to own, and it's a buy here. It is. I'm not telling you to buy it, but it is a buy here. It doesn't matter if it goes lower because the fundamentals are fucking astonishing. And even though it looks like price is still elevated, as I just told you, it's not. They were trading at a PE of like 20, mid 20s down here. They're currently, based on their forward projections, trading at a PE ratio of like 19, which for a tech company is crazy cheap. But for the best company in the world, it's exceptional. It's exceptional. So, you know, it's really not that hard. It's not. It's not that crazy hard, people, right? But what did I tell you? What did I tell you? Regardless of all that stuff, here we are with the fib levels again. We got above this one, we went up to test the next one. We got rejected, come back down, closed underneath multiple times here. Now we've now lost support. Where do you think we're going to go next? Well, 0.618 fib tells us 163 is pretty likely, right? Stock probably gets supported there. Well, wouldn't it make sense to just drop it a little bit more though and grab this previous support area, resistance support area? Makes sense. So where would I be a buyer? Well, anywhere from like pretty much right around where we are, anywhere in this box on a company like Nvidia. And not every company is the same, not every stock's the same, so I say it's important to tie the data to the technicals and use them in tandem to know when to make good investments. But Nvidia's not a company that's going to make you a millionaire anymore unless you get a ton of money to put into it. Its doubling potential is pretty small at this point. Their market cap's like $4 trillion right now, and it was $5 trillion at one point. Like, for it to double your money, it has to become an $8 trillion company from here. You know, so that's not as easy to do as doubling a, say, $200 billion company, right? So, you know, I made a lot of money off the stock. I started buying it when it was a $250 billion company. It's one of my best investments of all time. I still think it's worth owning, but don't expect to, get rich unless you put a ton of money into it or use leverage or options. And I'm not suggesting you do that, especially in these markets. But look, um, I could spend all day telling you guys the topping signals. There was tons of them. There was fucking fund managers offering like 5x leverage ETFs on the market. Dude, you want to talk about a clear topping sign? There's a lot of ways if you actually follow markets and you follow the economy. It was very clear that it was coming, okay? And now we're in this decline. And I'm here to tell you, it ain't done yet. It ain't done yet. and it could get much worse. But there's also a way to know where you should start buying. Okay, and we're almost to those points on some of these stocks, and in some cases we actually are. And if you want to find out what those are, I would love to help you guys out, and I would love to help you make better financial decisions, not for you, but teach you how to make them yourselves. And hopefully you found some value in this video. I know there's a lot of technical gibberish and probably a lot of stuff went over your head, but if any of you guys want proof of any of the stuff I'm saying, I can go find the Discord messages when I shared with my community like, hey, it's time to get out. Here's what I'm seeing, and I made videos like showing them what I was seeing, just like I'm doing here, except in more detail in the short term. Um, and yeah, you know, uh, you can make a lot of money in a single day if you know how to use these technicals correctly, right? And I'll give you guys a free one. I'm not saying anybody should take this, but to close it out, just so you guys can watch and see that I'm not full of shit, I'll give you a free one. Okay, so here's the S&P 500. Again, two scenarios here. Sunday, we open, futures opens way down here because we got some bad news. Maybe even way the fuck down here. That's possible. If we come way down here, that would be the most amazing single day trade that you could ever take in your life. Why? Because at that point we're so overextended from these moving averages. Like the 50's way up here at 680 still. Crazy. The market never gets far from these averages for very long, ever. They snap back to them. That's how they move. Okay, so we're already like really extended from the 50 here to the point where I probably should have closed my short today, but I'm expecting this news over the weekend, so I decided to keep one of them open. I did close two though. Again, everybody has different risk tolerance. But point being, two scenarios are going to play out, and, I, and I'm going to close on this. I doubt many people stuck around this long, but here you go. This weekend we get the news that we went to war, some shit happens, the VIX spikes, market comes way down here, flushes, immediately bounces off this line, and will go all the way back up within a few days to fill this gap and proceed to come up to the 650 level and test it again. That's one scenario. Absolutely life-changing money could be made in that single move with options if you're willing to take some risk on that, right? Not telling you to do that, just telling you it is possible, okay? Scenario 2, we open on Monday, nothing actually happened, false flag. We come back up, fill this gap, test one of these two moving averages, right? Probably this 650 level though, because that just got absolutely hammered and fell right through. We will get rejected there because there was no support there, and we immediately roll over again. Now in that scenario, would I go long here? No, I would wait for the short to set up and I would short it, right? In both scenarios, in a very quick period of time, you can make a lot of money. Why would I short here? Because we're in a strong ass downtrend, dude, with really bad news. Okay? You just ride the thing. Why would I take a long down here? Because we're so overextended and we just so happen to hit huge market support. And the first time you test this support, every single time you get a bounce. Bounce, bounce, and it's the third time that you break it if you're going to break it. Almost always, right? Look, hit resistance. 1, 2. What happened on the third time? Broke through it. All right, let's go find another one, right? Here you go. Hit resistance. 1, 2. Third time broke it. Continued on. I mean, I can do this all day. I can do this all day, right? It doesn't happen. It doesn't have to happen like that. But the point I'm making is supply and demand zones tend to hold on for the first test of them. Pretty much always, especially after a huge move like this. Like we're way down. This is an index, okay? 11, 10% doesn't sound like a lot, but this is trillions of dollars flushing out of the market right here, okay? But we're not crashing. We're not. Oil is elevated. Does that cause a temporary problem in the market? Yes. Could it proceed to a recession? Yes. Could it cause more tailwind or more headwind for stocks and cause us to go lower? Yes. Is it all going to happen in one move? Absolutely not. Absolutely not, because the data has to prove it. Okay? So Market prices in what it knows now, come down here, then we find out more. And then based on that information, we consolidate for a while. It might be Q2 earnings, right? Q2 earnings comes out. Companies say, oh, well, growth has stagnated because this, and this. Market will flush, right? As soon as it gets wind of that, boom, flush, got to reprice. Okay? Q2 earnings comes out incredible. Oil situation gets resolved, right? Everything's good to go. The economy starts to stabilize, gas starts to come down in a few months. What do you think happens in that scenario? Boom, right? So the point is, don't predict, don't anticipate, react, and use the technicals to take trades and take positions at smart spots that are risk adjusted, right? Let me give you one more scenario. Sorry, I'm still going here, but Microsoft, right? This is a huge support for Microsoft. We're under the 200 um, moving average. If you wanted to buy Microsoft today, start buying here. I would protect this with some room here. I'd give it like 10% on this, on a company like Microsoft at these levels. I'd still give it about 10% considering the financial conditions we're in. But you could dump $10,000 into Microsoft at this level, and honestly, this perfect spot would be just above these levels, or like really on Monday. Monday's gonna be your day. I'm not telling you to buy it. I'm not. So don't anybody tell me they did this. Invest at your own risk. Know what you're doing. But you buy here. Monday, we're probably gonna be closer down here. I'm just gonna be realistic. That's what it's looking like. We're gonna be down here, right? You set a 10% stop loss. You put $10,000 in the market right here. Boom, 10,000. Right here. Ba, ba, bing, ba, boom, ba. Okay? You're risking $1,000 because you're setting a 10% stop loss on it. The odds of Microsoft coming down another 10% after a company of this size has already had a 35% move and is showing positive growth, very unlikely in something, unless something's really wrong with the world, right? Something's really, really wrong. Okay, so risk reward wise, it's worth it at these levels already. Again, you're testing a 13 or 14-year running trend line. This thing has held up every time. Um, so yeah, you get here, right? Take some risk here if you want to, whatever, you do you. Set a 10% stop, $10,000, boom, fucking, you're in, okay? And let's say it takes a year, who cares, whatever, right? Year you get back to that $600, what did I say, 587? 7, 587, boom, there, that's that price target, boom, 63% upside. So in this scenario, 10% stop loss, you ride the thing to its EPS projections, if that's how you want to play it, not telling you what to do. That gives you a almost 6.5 to 1 risk to reward, so you're risking $1,000 to make $6,500. Okay, and once you get in profits, you can move that stop loss to break even if you want. So it's literally impossible for you to lose money. Let's say you get up 2 grand. You can bump that stop loss off to like where you're up $500. So if the stock retraces, gives back all its gains, you still make $500. Walk away, no big deal. Okay? There's ways to play this market and not be a retard. Yeah, I said it. I don't care. Okay? Thanks for watching. Hopefully you learned something. Come hang out with us. Come join. It's trying to change lives, trying to get more people involved. Show you guys that you can do it too. And yeah, have a good one.